The market depth indicator made a great call yesterday evening on the short side in gold. Big sell-off in gold. It was preceded by a lot of purple, and so you see that it began here. The session begins here at 6 p.m. Eastern Standard Time, and you see there's a lot of purple coming in. The market doesn't move yet, but you see a lot of purple coming in. It's a very illiquid time period. Then you see some blues coming in, a little bit of a back and forth. Then Europe opens. Europe opens here, and you see the purples coming in, purples coming in, purples coming in, and then boom, then you get the sell-off here. And so you get the sell-off, the sell-off, the sell-off. Purples mainly, some blues in here. There's some blues and these small counter trend rallies, but overall purple anticipated the move down. There was more purples earlier on, and so you were able to take the breakout if you were watching this. And then when the move is over, blues started kicking in. So you see these blues, and then purple, and a little bit of a sell-off here. So it's interesting how these moves. Even this move right here, you see this purple, nothing happens, and then after this is over, boom, a sharp sell-off right there, but then a rebound. And so these moves in the market depth tend to precede the moves, and so you can watch for moves. If you're looking to go short or long a market, you can confirm it with this indicator. For example, if you wanted to buy gold and you saw these purples, you might wait. Or if you wanted to short gold and you saw a long list of blues, you might want to wait, because you might want to confirm that what's going on in the order book also is in line with your analysis of price action. And so it's kind of this mysterious activity that goes on, this stealth activity that goes on in the order book that can sometimes trick us. And you know, I don't know about you, but I felt like I've been tricked before in the markets many times, actually, when just looking at price. And so I love having this indicator. Kind of gives me a little heads up. You see some blues here, and it doesn't always work. You know, you have blues earlier in the session, and the market's kind of sideways after this big sell-off in gold. So you see blues and purples and a little bit of a blue here. So if you're looking to go long, you could go long, and then maybe you're long in this time period as this rises, but it doesn't really fall through, so you have a kind of a tight stop. I like these because I put tight stops in behind them. So if I go long in here as this rises to new peaks on the evening, say for example here you go long here, and it just doesn't budge, and then you have this stop right down here. So you can have a strategy where you have tight stops, and then purples are coming through. This can also be seen as oversold or overbought. There's a lot of different ways to look at this indicator. These are small purples and the market is down, and so you could say this is oversold here, and then there's just a mix of blues and purples again. So that's gold the last 2 days. I'm going to show you crude oil next. The price action today is a great example in crude oil. So for example, if you like to trade the long side of crude oil and you see all these purples kicking in, you might not want to go long just yet, unless you want to trade with big stops. If you want to trade with tight stops, all these purples are coming in here, and then boom, the purples are done here. But you can't look in the future, so at this point you don't know the purples are done. At this point you don't know the purples are done, and so you keep going, and then you see the blues kicking in. The market starts to move up, and you can maybe look for a place to buy strength or buy the dips, and there's a little bit of the blues are kicking in. So you say, okay, I was waiting to go long, but I didn't want to do it when these purples were showing a bearish side of the market. So this is a little bit more bullish now, and then I can look to go long. And you get this wobbly price action as the market changes trends, and then the blues kick in. You get a reaction there. That could be a great place to get in if you like to buy the dips. If you like to buy strength, then you wait for more upside action. You could buy it there. Pretty choppy session, but you get this up move, up move, up move blues. If you're trailing it tight, you got out as this market rolled over, and then you see more purples, so you wait. Purples wait, and then you get the blues kicking in again, and it drops a little bit more. So you could buy when it turns blue. Right here, you've seen this blue, And this isn't a very high blue. It's the first blue after purple, so you're looking to buy as it rises, and it hasn't risen yet, and then it starts to rise, and then you could look to buy it as it rises, as these are blue. So one of my favorite ways to use this is a long strategy. If you're going long, is to wait and buy it as after the market's gone down. The blues come in and you buy it as it rises with a tight stop. Most people want to pick a bottom to find a tight stop. I've found that pretty hard to do. I find that it's best, if you want to use tight stops, to find a market that's rising in a strong trend if you want to use tight stops. And so this market, for example, is crude oil. Can be volatile, so you have this market that's rising, and you buy it here, and you have to have this tight stop. Maybe you got stopped out, but it's rising again, so maybe jump in again here. It's for active traders. So you're going to have some small losses. The goal is to have some small losses and then jump on some winners like this. There's many different ways to trade this. You could buy the dips as well, depending on the market, time of day, lots of different factors. You could buy the dips or buy the strength, or short the rallies, or short the strength if you're bearish. So that is the market depth indicator on gold and crude oil today. I wanted to show you the latest ways that it can be used.